Hello and welcome to Your Money, Your Call. I'm Kim Slater. If you've got a question about shares, our phone lines are open on 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. Tonight we've got on the panel Tony Lacantro from Lacantro Capital and Ben Clark from TMS Capital. Welcome to the program, gentlemen. Well, today was one of those days in the market where I thought it was either preferable to watch the grass grow or the paint dry. I wasn't quite sure what. Because the market was up 20 odd points and we were grinding away. I guess as we started to push into the new year, it's becoming obvious more and more as each day goes by that the risk on and the yield chase is on in the market, and we're seeing that in a lot of valuations. Obviously, China's growth is expected to be measured, and the commodity prices are up. I.e., iron ore still holding its ground. I don't want to spoil the party, but in the back of my mind, I've got this thought: should we be looking for a seat before the music stops? I know we've got this this situation developing in the States, but it seems like there's a bit of a disconnect in the market at the moment. It's not so much worried about the macro; it's focusing on the micro. Today we saw Boral sacking 700 people. Whether or not that seems to be more due to management inefficiencies than actual signs of Dutch disease. So first of all, starting with you, Ben, you've been back, you've been looking at it. What do you think of it, and are you worried?
I'm not worried, but I do think that I actually think the reporting season that's coming up is probably going to sort of underwhelm. And I think a number of stocks, particularly in the cyclical area of the market, have run very hard into sort of where we are now, mid-January. Reporting season will kick off in a few weeks. And I think there is just speaking to companies, you don't feel sort of overwhelmed by an increase in optimism amongst CEOs at the moment. And I think there is the risk that CEOs come out and sort of say, bearing in mind they're reporting on the previous 6 months, which wouldn't have been good, and then a lot of attention on the outlook statement. And I think they're going to still be fairly sort of cautious and muted. So I think there's going to be buying opportunities because I think earnings will pick up towards the end of this calendar year and into 2014. So I think, and in tandem with our reporting season, we've got these US debt ceiling negotiations, and anything in the US just now seems to be done at the very, very last minute, and with the potential for the market to panic. So there could be a good buying opportunity coming up, and I think I'm not overly concerned about how things are. I think more that you want to have some cash up your sleeve to take advantage of what could occur now. I think it's going to be a sort of a volatile old 6 months on our market and a strong sort of second half of this year. So you want to sort of set yourself up for that.